S&P 500 falls for fifth straight day. What are the major factors causing the sell-off at the moment?
The factors causing the sell-off are cycles and sentiment. They have very little to do with fundamentals, earnings, or the economy, which is exactly the opposite of what a lot of investors think. The sell-off really started back in mid-September when a lot of the small caps started to deteriorate, technology dropped off, and we saw a pretty big pullback. And then we attempted to rally into early October, and then from the beginning of October down, the market literally went straight lower. So a lot of it is not earnings related at all. A lot of it is technology really started to fall back in June. And so a lot of it is just sector rotation out of some of the leading sectors in the market. So technology represents about 20% of the S&P. So when that starts to fall, it's just very difficult. And so everybody's sort of scratching their heads and wondering, why is the market falling if earnings are good and the economy is good? And it really has very little to do with that. A lot of it's just market cycles that have started to turn, and sentiment got very enthusiastic into September, and that was exactly the opposite time that you wanted to be long stocks. So I would argue it's more about the perception of the economy turning down than it is the actual numbers. People think that we're in the later innings now, meaning the economy should start to slow down. The perception of that can cause a market sell-off. It's not the earnings and the economy itself. I still tend to think that the market has a chance of rebounding, but I think we are witnessing a larger stock market peak in progress, which is going to take time. I think between now and next spring, summer, that the market is in a topping process where we can rally, but I don't think that the average stock will be able to get back to new high territory. So I really think the years between either 2019 or 2020 into 2022, we will have a bear market, in my view. And so I think we are in the later stages of the game. I don't think it's right to really sell. I think most people can still buy dips here and think that we can rally into year end or even into next spring. To answer your question, it's always very difficult because many people that are very smart look at the fundamentals and they think things are fine and the economy's fine, and yet stocks are falling day after day. And it's just more about gravity where, things go up and things go down. And when these cycles take over and the energy takes over, it doesn't matter really what's happening. It's just similar to bull markets, but people they think it's earnings that are driving stocks up. And then when the market turns, they say, well, the earnings are good, so it just must be the speculators that are causing the market to fall. And that it doesn't always work that way. In both directions, a lot of it is just cycle driven and sentiment related.
Asian stocks mostly down as oil prices slip further. Do we expect the market, especially Chinese market, to bounce back in the near term?
I think we are going to see some evidence of that in the recent results out of Tencent. We are seeing a little bit of stabilization in a few of the key names, at least the Chinese tech stocks. Alibaba, Tencent, Baidu, they've been acting a little better in the last few weeks, better than the U.S. market. So I think we're close to a time when it's right to buy some of these. Technically, I've started to see signals. The downtrends are still intact, but I think that market can do better, I believe, than the U.S. potentially in the months to come.
Lemon Zhang of Standard Chartered Bank stated that the dollar yuan will strengthen to 6.82 by the end of 2019. Do you hold the same opinion as her?
I do. I think that is likely. And I think I relayed that in a prior call. I think that I think we're starting to peak out in dollar yuan, and I think that renminbi can rally. Yes.